Euro Swiss daily forecast January 30th, FXEmpire.com. Euro Swiss fell during the Friday session after first rising in value during that day. As you can see, the pair formed a shooting star at the bottom of the most recent downtrend, and while this is normally a very bearish continuation signal, fact is that we are just about 60 pips above the line in the sand that the Swiss National Bank has put in this pair at 120. Because of that, you just can't sell this pair. It's just simply too risky. But buying it right now, we just don't have any signs or signals to do that either. A breaking of the top of the shooting star would be a potentially strong buy signal. And of course, if we fall and retest the 120 level, any signs of support there would be able to be bought as well. Swiss National Bank will absolutely have to intervene in this pair if it does fall down to 120, which it looks pretty hell bent on doing at this point in time. If it does that, the Swiss will simply have to react. Otherwise, they will lose all credibility at that point in time and not be able to stop the massive onslaught that will come in the markets. The markets will certainly work against them and sell this pair off as soon as they figure that they've been duped by the verbal intervention of the Swiss. If that were the case, the effects to the Swiss economy would be devastating, as the Swiss send 80% of their exports to the EU. Because of this, intervention is almost undoubtedly going to happen somewhere below the 120 mark, and it will more than likely be very brutal. We won't sell, but once we get down to 120, we might be interested in buying and ride the central bank intervention up. In the meantime, though, we're simply going to have to wait for one of these signals unless the Europeans magically fix everything, and then, of course, this would become a buy and hold pair.